Hey guys, it's Justin Goodber here with Financially Simple. So it is at the end of the day, it is Thursday, January the 3rd, 2019. I want to wish you a happy 2019. I want to take a second here though and go live here on Facebook, and this will be aired as well on YouTube, and address a question that I've received no less than 5 times today from some of the most astute clients that I work with. The question's simple. Justin, what in the world is going on with the stock market? So I am going to do my best to add some perspective right now to what's transpiring. So on October the 3rd of last year, many of our investment accounts, mine, yours, investment accounts, perhaps reached the highest they ever were in value was on October 3rd. Now, it may have been a day before then, but a day after, depending on your particular allocation. But on October 3rd, nonetheless, that was about the average pinnacle day for many of our investment accounts. What happened the fourth quarter of last year is just amazing. I was writing a very long letter to our clients today that gives all of my insight, so I don't give everything out in the public. A lot of my clients get a lot more information, but I was explaining what is happening. So I want to take some of those highlights and bring it in here for you. The fourth quarter of last year was amazing. The market dropped like a rock. I was recording a video for our clients. I didn't send it to them yet, but it was a December video, and I was looking in December, and I noticed that in past performance. Now, I got to go ahead and say, past performance of the stock market is never indicative of future results. We can't take what happened in the past and apply it to the future. Today's market is today's market. Tomorrow's market is tomorrow's market. Whatever it's going to be in the future is what it's going to be in the future. But I was looking back in history, and I noticed that 3/4 of the time, December was a good month. It usually was a good month. 3/4 of the time. That's not what happened this last December. We started doing what's called tax loss harvesting for our non-qualified accounts that are not in retirement accounts. And we started just selling positions in a short-term loss position to help our clients offset their income taxes. And I was noticing about December 15th as we were doing these sales that the market's still dropping. And we were watching just accounts drop. Ultimately, the drop just ended up being pretty amazing for last year. In some indexes, we actually saw almost a 20% drop in fourth quarter. Many indexes were in that 13, 14, 15% drop in one quarter. When I say indexes, I'm talking about like the large cap growth index, the large cap value index, the mid cap growth, mid cap value index, small cap value, international position. Actually, internationals fared pretty well in the fourth quarter of last year because they had been blistered already throughout the year. Here's some interesting things I found out for us. On Christmas Eve of 2018, we had the largest single drop in a day ever recorded on a Christmas Eve. But then turn around on December the 26th, the day after Christmas, the Dow Jones had its greatest gain ever. It went over 1,000 points in one day. Then on the 28th, I think it was the 28th, we actually watched the last 90 minutes of trading in the stock market, and it was unbelievable. It was like a roller coaster. The market had been down, and then it just shot straight up like a roller coaster taking off. Then today, I look at the market. I've been watching it today. Apple. I'm not telling you to go out and buy Apple. That's not what I'm saying, but Apple dropped almost 10% today in one single day. So what's going on? You know, we've gone through 9 years of what's called a bull market, where the market has been climbing over a 9-year period of time. And we've had very, very, very little what's called volatility. Think about being on a basketball court bouncing a basketball. We've had very little volatility. The markets have not bounced up and down a lot in the last roughly 9 years now. So what's happened is volatility has returned. Now, I would argue that the market last year was overpriced. When I say the market, I'm talking about the domestic market. I was tracking specifically the S&P 500. In October of last year, it was at an all-time high on what's called a forward-looking price per earnings index. And that's looking at what the price per earnings is in the future going out. I'm trying to keep this ultra simple today. Today, now with the fall of the market, we're back in the 2013-ish, maybe early 14, late 13 range of where the price per earnings ratio is. So the market is falling considerably. It's falling considerably. So why? The economy's good, right? I mean, I was reading reports today of the unemployment rates are at historic low. Oil is pretty doggone low. Oil is pretty low. Interest rates are, it appears that the Federal Reserve has moved from their hawkish stance where they're going to raise interest rates really fast to now more of a dovish stance where they're going to kind of keep interest rates a little bit more at bay. We are not hearing right now there's going to be 5 rate hikes last year like we were this year in 2017. So we're not hearing those things. So the Federal Reserve's kind of backing off. The tariff issue, which has affected the international markets and the emerging markets, at some point, it's got to come to an end. I have my suspicions that politics are going to take over and the tariffs will not be in place as soon as the election processes start. I think it's bad for the current political powers that will be. Now, I'm not saying that's going to happen, but it's just my opinion. So most of this is my opinion, by the way. So we have a lot of things out there which are, we can isolate to why the markets have been good, and we can isolate to why the markets have been bad. I've got a picture that I took this year on my phone where I looked at every index that I can track, which is a lot. And all of them on that particular day were negative. All of them were red. Every last one of them. Everything from the gold index to corn index to master limited partnerships, REITs, non-traded REIT, publicly traded. I was looking at every index that I could track and everything was red. And here we are today. And I think a lot of what we're dealing with is fear. I think we dealt with some of that in this time period. I think we had a lot of people taking profits off the table this last year. Some would argue that the markets are due for a correction, and we are there now. We're officially in a bear market. What do you do? Because that's the ultimate question that people are asking me. Justin, what's happening in the market and what should I do about it? Well, if you haven't spoke to your financial planner, your financial advisor, your certified financial planner in the last 6 months, then I'm going to say the first thing you should do is talk to your financial advisor. If you don't have one, give us a call. But the first thing you should do is talk to your financial advisor. And they're going to look at to confirm that your portfolio, your investment account is in direct alignment with your personal goals. We were talking with a client of mine whom I dearly love. This guy has an unbelievable story. And he and I were just, being jovial, but at the same time, it was a serious conversation. He said, Justin, I feel like I'm in a boat. I went, okay. He said, I feel like I'm in a boat and I've asked you to guide me, to be the longshoreman who's going to guide me to the other side of this river. And we launched off and we're in the middle of the river now. And all of a sudden I'm wet. I said, yeah. He goes, I didn't count on the waves being this high. I didn't count on the wind being this strong, but we're out in the middle of the river. What do we do? And I said, well, you can jump out of the boat and you're going to be really wet and perhaps drowned, which we don't want to do that. We can go back, but we're not going to reach our destination, or we can just man up and hold on. Let's get to the other side. So if you've not spoken with your financial planner and you find yourself in the middle of this boat and you're going, man, I've lost more money than I anticipated. I should have had my portfolio position it differently. Look, you don't want to sell. You don't want to make any major changes traditionally when you're in the boat going across the river, when you're in a low part of a roller coaster like we are right now. You don't want to go in and make drastic changes. Look, I lived through 2007, 2008, 2009 as an advisor with many, many, many clients. The one thing I can remember most is when those clients panicked. And whenever they sold because the waves were too big, they got too wet, or they made decisions in the middle of an emotional state when the markets were down, those individuals never recovered. They made poor decisions. And they're friends of mine today. Some of them are clients, and they said, man, I wish I would have listened to you then. Have clients saying, Justin, I didn't listen to you then, but I'm listening to you now. So if you've never worked with a planner, now's the time to talk with your planner. For those of you who are working with a planner, look, more than likely, your planner has put you in a position that's going to help you reach your long-term goals. Don't forsake your long-term goals. Don't allow the national media, the pundits out there, to cause you to change direction. In fact, do something different. Do something totally opposite. In our conference room here in the office, one of the things we have is a quote by Warren Buffett, to whom I love. I love his quotes. He's arguably one of the best investors of all time. He has a lot of things that people misquote him a lot, but with this particular quote, it said, whenever people are fearful, be greedy. Whenever people are greedy, be fearful. Right now, friends, we're seeing a lot of fear, and rightfully so. Rightfully so. People are seeing accounts drop, sometimes for the first time ever. We have clients who did not invest through 2007, 2008, 2009, and now they're seeing volatility hit them for the first time in their late 20s, 30s, or 40s. So they're being fearful, and I understand the emotion of that. I deal with this daily. So if we take Buffett's scenario, one of the things we can do when the market is down is we can invest more. Now, that you didn't expect me to say that, I'm sure, but one of the things you can do is you can look at your retirement accounts and you can increase your savings in your retirement accounts right now. You can increase, or maybe you have some cash on the side, you can deploy some cash into the markets right now. Whenever I was growing up, the Kmart used to have the blue light special, which is where you would have these crazy little blue lights spinning on something that was on sale. Think about the stock market is on sale. At least it is as the price it was priced back in October the 3rd. So one of the things you can do is you can buy more now and realize that you're getting it at a 10, 15, 20, 25% discount, depending on what you're buying, as opposed to what it was on October 3rd. So that's one of the things you can do is invest more now. Second thing you can do is to rebalance. And your advisor more than likely is dealing with this for you. They're rebalancing your accounts. They're selling the positions which have not lost as much money and buying positions which have lost more money. That's a rebalancing account. Maybe you're in bonds. By the way, bonds are down this year because of the rising interest rates, but you didn't lose 2%. You maybe lost 1%, 2%, 4%, depending on what type of bond you're in, maybe 6%, depending on the bond class. You may take some of that bond that didn't lose a lot and you may flip it down and buy some international position which lost a lot, or some domestic positions. Small cap value, for example, got blistered last year. So you can rebalance right now. So the first thing we can do is we can invest more. The second thing we can do is we can rebalance. The third thing we can do is just don't worry about it. Like Justin, that's like opposite. Another quote from Buffett is he said we should be slothful in our investing. I love that word, slothful. We've all seen a sloth. They move very, very slow, right? That's the way investing is for many of us. Just because we have the ability to make quick decisions doesn't mean we should. I was reading a book called The Emotional Investor, and inside there it talks about that actually females are better investors than males, and just by they prove statistically that this is the case. And they went through the personality types, and it found out that many times young males between the age of 20 to 40 often feel like they can do better than what the markets are yielding, and so they want to tweak it more, and they want to play, and they think they can outsmart the markets. Friends, you cannot outsmart the stock market. I was reading a study about the 5 supercomputers that tried to actually outperform the stock market, and 5 supercomputers with all their data that they were crunching at an unbelievable amount of computing power could not outguess or outperform the stock market. And then whenever I say the stock market, I'm talking about modern portfolio theory. I'm not talking about one particular index or another. So one of the things you can do is forget about it. Turn off the TV. Leave it alone. If you're not planning on retiring in the next 3 to 5 years, and if you are planning on retiring in the next 3 to 5 years, you should have already been talking to your planner. But if you're not planning on retiring, you're my age or younger, dude, buck up. Save as much money as you can right now. Look, the stock market over a long period of time makes money. Not in the short period of time, but long period of time. Another thing I heard this week, and I want to address that, I'm going to be done here in this short video, is someone said, well, Justin, I'm going to lose all of my money. Ooh, that's big. Now, this was a young person, believe it or not, and their emotion was they had never seen the stock market go into volatility. They've never seen a bear market like we're dealing with now. And he said, Justin, I'm going to lose all my money. I got to stop. I got to quit the bleeding. And I said, time out. Do the opposite. Do more. And they thought I was crazy. And they said, Justin, I'm going to lose it all. So what they were dealing with is this thing called recency bias or the extremism bias. There's 2 different bias there. They're kind of blending together. But I'm going to give you an example right now, friends. It is almost, it is winter, except for in Tennessee, which is like 75 degrees here on January the 3rd. But it is winter time. If I were to notice that it was going to snow an inch in the next hour, if I approached the snowstorm in the same way that many people are approaching the stock market right now, here's what it would sound like. Oh my goodness, Emily, I look outside and it snowed an inch in the last hour. At this rate, in February, we're going to have 22 foot of snow. Grab the milk and the bread, grab the kids, we're out of here. Now, that is ludicrous. You would say, Justin, you live in Tennessee, brother. It ain't going to snow that much. Now, maybe if you're in Alaska, but even then you can survive. We have the tendency, whenever the markets or the news is negative, to take things to the extreme. Don't do it. Don't do it. This is nothing new that we're going through. It's a buying opportunity. It's an opportunity for you to buy things at a discount. It's an opportunity for you potentially to accelerate your goals if you do this right. So I'm talking to you as a planner. I'm talking to you as an advisor. I'm not giving you specific investment advice. I'm not saying that the market's going to go up and the market's going to go down. Anybody in their right mind who thinks they know what the market's going to do has lost every love in mind. There's no one that does. Even the professionals. I read an article this last week where the professionals actually said the stock market was going to be 7, 8, 10, 12% in 2018. Not one of them predicted a bear market in 2018. No one can. Just like we don't know if tomorrow the stock market is going to rebound significantly and offset all those losses. We don't know. In fact, I was reading a study, and I'm going to give you this last little study. It was actually written by Eric Nelson, CFA, and he was talking about the various times when we had bad quarters, because that's what we just had. He showed that from the fourth quarter of 2008, the market, in this particular example that he gave, the market lost 27.8%. And then he projects that the next 12 months, the market rebounded 37.1%. He went on to show that the third quarter of 2011, the index that he was tracking fell 19.9. And then the index that he was tracking the following 12 months made 27%. He went on to show that even in 2002 and 1998 that they had respectfully 17 and 16% declines in one quarter, only to have the following 12 months increase by 33% and 27% respectively. Now, he's not saying, and I'm not saying, that the stock market just had a bad quarter, so we're going to have a positive year this year. That's not what he's saying. What he's saying, though, is bad quarters are part of the game. It's okay. You're in the boat going across the river. You got a little wet. Don't jump out. Don't jump out. Keep your destination in mind. Don't panic, and you will get through this. It will be okay. So, guys, that's it for today on this quick video on the stock market, what's going on. I hope that helps you a little bit. I hope it adds some resolve to you. Hey, look, if you don't have a planner that can talk to you and walk you back off the cliff or give you advice on how to invest or rebalance or make potential money when the markets are down like today, give me a call. You can reach us here at the office. You can reach at Justin at Financially Simple and say, hey, brother, I saw you on YouTube. I saw you on Facebook, and I like what you're preaching, buddy. I don't have the secret pill, but I can tell you this. I love our clients. And those who keep a rational mind whenever people are irrational often will be okay. So with that, friends, I know life is hard, life is complicated, and life can be frustrating. The markets, oh my goodness, they can be aggravating. Look, money doesn't have to be. Let's continue to make our lives at least financially simple. Y'all have a fabulous 2019.